Good evening, anyone who's listening. This is Pineapple Chunks.
And this is Elihu.
And we're going to be talking about inflation. We're going to be talking about cryptocurrency, alternative cryptocurrencies, and inflation.
And we can't talk about inflation without mentioning our Lord and Savior, Jay Powell. And we can't talk about cryptocurrency without mentioning our Lord and Savior, ApeSwap, on the Binance Smart Chain network. And we can't talk about any of this without saying that we're not financial advisors. And if you listen to anything we say, you will lose all your money. But we're going to tell you financial advice anyway.
Right. So the first thing is Jerome Powell had a Fed meeting that he does on a weekly basis. Typically, he doesn't come on all the time, but he does.
He's a little shy.
He did today. And he basically said, forget stocks. We're not worried about stocks.
Screw them.
We're buying bonds and mortgage-backed securities. And what does that mean for mortgage-backed securities? That basically just means the loans that are given out to people who buy houses.
Dude, what is a security?
A security is a asset. It's like a piece of paper, like $1, that says you are warranted to a certain agreement. So on the dollar here, it still says this note is legal tender for all debts, public and private. So that doesn't really mean much because this is a currency that isn't backed by anything because we're printing money like crazy. We're printing more money than we have since World War II.
Printer go brr.
Brr. Well, I can't believe I just did that.
It was pretty good.
But still, what that means is that the Fed is using their printed money, that additional trillions of dollars, to buy bonds and mortgage-backed securities, which basically lifts the weight off of banks because
banks are the ones that give you the mortgage.
Right.
And they have to depend on people paying their mortgage, and they don't, they risk forbearance.
Right now there's a forbearance thing. There's a lot of people who aren't
people don't have
paying.
to pay their mortgage, and the banks kind of have to take that hit.
Right, till September or so.
And so the Fed buying them out is nice for the banks because now the banks don't have to worry about that forbearance risk. They just get all their money up front for those mortgage securities. Yeah, so when they're looking at their balance sheets, now they don't have all this
debt that isn't being paid. So it's taken off. It's bought out by the federal government. And so they can continue doing what they do best and lending money out with their own parameters. And Jerome Powell said that they're going to continue spending around $140 billion a month in buying mortgage-backed securities and treasuries. But what's interesting is that he linked the two today. He linked them. He linked real estate and bonds.
So they're related in a way, but he also didn't mention anything about stocks or stock buybacks. Does the Fed even do that? No, stock buybacks are only done by companies themselves. But
well, they indirectly do it because sending the stimulus checks out goes to the degenerate traders go into stocks.
Right.
So, but at the same time, he said that they're going to keep him. He's consistent with what he's saying. They're going to keep inflation running hot at 2.5 to 2%, and they're only going to raise rates when they feel it necessary. But he gave us a timeline. He said we're not going to raise rates, and if we do decide to, you're going to know well in advance.
He's a homie like that. Thanks for looking out, Jay Powell. What's interesting that at least what I found interesting was that the bank can take on this risk without really worrying too much about people not paying their mortgage because, well, not the bank, I'm sorry, the Fed. The Fed doesn't have to worry too much about the people not paying their mortgage because the Fed has all the time in the world. That plus they can just print all the money they need. Really. Right. So let's say I have a mortgage and I go on forbearance. I don't have to pay my mortgage. If it were still owned by the bank, that mortgage security, they would have to lose money from me not paying my mortgage. But if the Fed owns it, if they own that mortgage-backed security, they can just
sit on it. Like they did during the Great Recession of 2008. They bought all the mortgage-backed securities that people were defaulting and couldn't afford it. But they just sat on it until the courts decided what they were going to do with all these default mortgages. And then after a while, the courts decided, they worked some things out with the people, and the people were able to pay something as opposed to nothing. Because when you're dealing with people who are going bankrupt or can't afford to pay something that they owe, you rather get something than nothing. And the Fed actually profited from this 2008 financial crisis. Something that the banks wouldn't have done. Banks are a little bit more vicious. They have investors. They have people that they have to basically, they're at the whim of others. But
it's essentially a bailout.
It's exactly a bailout. Yes,
it's kind of what you described earlier, right? The Fed is just the United States personal venture capital firm or
private equity
firm. So
they have a longer time frame.
And private equity firms, they're notorious for just fixing everything up. They're just, they're there with wallets full of cash to protect.
But I mean, think about it. Like, the Fed has a longer time frame, so they're not they're not at the whim of like the public markets, like JP Morgan, Wells Fargo, Goldman Sachs. Like, they have to do quarterly reports,
right?
They have to show investors who buy their stocks, and like public investors, people like us who may be invested in stocks or may not be,
because they're publicly traded, right?
Right.
And the Fed isn't really publicly traded.
So if you start seeing on Wells Fargo's balance sheet, oh, look at all these loans that are on default, they're not paying, there's no interest, you're not going to buy their stocks. So that's why it's a bailout. That's what we did, the same thing with the airlines, or the government did the same thing with the airlines, where they bailed them out. They gave them money so they can continue, paying their employees. Little did we know that they were going to just fire everybody still take the money. But at least we gave them the restriction of saying you can't buy back your stock, which basically inherently raises the price. So Jerome Powell basically went out and said that real estate is a go and bonds are a go. And coincidentally, it coincides with Biden's new proposition of capital gains tax of up to like 43%. And the reason that that's so interesting is that real estate and bonds are very tax friendly,
because they are debt as an asset.
Right. And bonds, for example, are tax free securities. So if you buy a bond and you generate interest from that bond, you're not taxed anything on that. Whether you sell it, buy, whatever, it's tax free. So that means bonds and interest rates are going to be fairly stable in the coming years. And real estate has a lot of tax write-offs, like the depreciation of the property. And also, if you're buying more real estate with the gains that you made from the first real estate deal, from appreciation, there's a 1031 exchange that allows you to basically not have to pay any capital gains tax, because you're reinvesting in America, and you're ultimately helping the overall market. Real estate is very important, and Jerome Powell stressed that heavily, because if we have a housing recession, we have a real problem. People lose their homes. We got homeless people. We have a stock market problem.
If we have homeless people, we have people not paying a lot in taxes. And if we have people not paying a lot in taxes, then we can't recuperate from the trillions of dollars we put into the United States economy.
Yeah, that's true.
So we want people sheltered, fed, and doing well so that we can tax them.
So Fed has a great, Jerome Powell, in essence, has a great outlook on real estate and bonds. He completely confirmed that. And, I think it's going to be good if you make the right decisions. And I'm going to say this to anybody who needs to hear this. No, not that. But for anybody who needs to hear this, like, if you are considering buying real estate, if you're considering making an investment that is going to benefit you, and hedge your risk against the devaluing of the dollar, because
it's going to happen, baby.
It's happening now.
Right now.
Right now, like, Dogecoin is more valuable than it was 3 months ago, which means that every dollar that you put into Dogecoin is worth less. It gets you less Dogecoin. So that means that there is inflation assets. We've also seen it in stocks. We're also seeing it in real estate. And
if you go to a supermarket, man, the eggs that I would get, the carton of eggs that I would get, the 12-pack of eggs that I would get has gone up like 70 cents since like 2 years ago. And I'm just like, this is ridiculous. I'm paying way too much for eggs right now.
Yeah, look at the consumer price index. So the consumer price index, for those of you who don't know, I'll give you the definition. It's basically just a basket of goods ranging from toothpaste, meat,
milk,
eggs, milk, all the things that the typical American every typical American buys in order to maintain themselves and lives, gas and all that stuff. And as you can see, it's been rising. This is over a year. Let's look over the 5-year chart, and it's rising. And that is correlative with inflation of prices of goods. So the consumer price index is a good indicator to see if there's growth in a country, if there's growth in GDP, but also in a sense, it's expected that we're going to have rising prices in consumer goods when we're printing a ton of money and people have more money to disposable income to buy things. And so, as demand increases, supply decreases, so prices also inherently go up.
Now, inflation doesn't encompass everything,
No,
right?
it does not.
There are several factors that affect the prices of goods. I mean, we just had the Suez Canal incident. For those of you that don't know, the Suez Canal got blocked by a giant shipping container ship, and that's going to delay a lot of shipments, and that's going to raise the prices of a lot of goods. That's what we consider ephemeral inflation, meaning it's only going to be temporary for a short amount of time until the logistics of all that gets settled. But inflation is not going to affect everything at the same time. Your eggs and your milk and your broccoli and your beans are not all going to increase in price in a parallel way. They're going to fluctuate at different rates. Same
Right.
goes with other asset classes or securities, for example. But the point is, inflation is happening.
It definitely is. If we can see it here, this is the chart of inflation, which inflation is really just a measure of the devaluing of the dollar, of your currency. So the more money that's printed, and also more importantly, the more money that is spent at a continuous basis devalues the dollar. And if we look at it over 5 years, it's been a very choppy ride. Inflation was very low, which isn't necessarily a good sign, because the opposite of inflation is deflation. And what you said, Elihu, is interesting, because Jerome Powell said the same thing. They expect that these rising prices in certain goods, that say, for example, some supermarkets have noticed, there's been rising prices in meats, in fine wines, and things of that nature, because people are staying home and cooking at home and buying these items specifically, as opposed to like the pastas and all this other stuff that people would only really cook at home when they need a pinch of penny or something. So now, and otherwise they would just go to restaurants too. But remember, expectations are different from the reality. So there might be an expectation that prices are going to stabilize, and Jerome Powell might be right, but he's also mentioned that the reality might be different. And granted, yes, we did have the Suez Canal situation, but there's a difference between, well, they're very correlative. Inflation and the consumer price index of goods are very correlative. And as we see, inflation hasn't really been a huge problem, except in this area. We had a sharp drop in inflation, which is exactly what you don't want in a government that is printing money, which is basically borrowing. Like the government is borrowing money from the central bank.
And this was during the pandemic, right?
Right.
Okay.
This chart is this is 2020 mark, and then
Which, when you think about it, people are staying at home. They're not going out as much. They're not buying a bunch of stuff. So the value of things decreases because the demand isn't there.
that's why you have this up and down area. But right now we're at like a good point where the Fed is okay with. They want to keep the inflation rate at 2% to 2.6%, which means your dollar every year is decreasing 2.6 to 1.7%. And we can aggregate that over 12 months. But as of right now, this is just at a per month basis. But just really quick, this just means that you should buy real estate.
Not financial advice, but
you should buy real estate. I'm a real estate agent. I say buy real estate. We're buying real estate.
I'm not a real estate agent, but I'm still saying buy real estate.
Yeah, because a house is, the Fed is already saying, like, they're not gonna let the real estate market die. They could care less about stocks, but they're not going to let another housing crisis occur. They're not going to let bonds become obsolete as an investment. And it working with the new tax plan for Biden, it makes sense to be in these areas, bonds and real estate. Now, bonds are for bigger money, but real estate, I've seen more people get approved for loans now than I have than before the pandemic. And if you have good credit, it'll happen. An income.
Where there's a will, there's a way.
Just real quick, this is 16% year-over-year growth in the U.S. housing market, according to Redfin. So that's inflation right there of asset prices. So it's interesting because there's inflation, but it's also like it depends where is inflation. So inflation in assets, it means a rise in prices. But inflation in the dollar, it means that yes, there is more of a dollar, but then that also devalues the currency. So just considering that it's a dilutive process, which like I was mentioning earlier, when you're dealing with a government that is borrowing money, basically at this point we're like 4 trillion, 5 trillion deep in borrowed money. Who are we borrowing it from? And this is for you to know, we're borrowing it from the central bank. And the person who runs the central bank, the chairman of the central bank, is Jerome Powell. And the central bank is an independent entity from the government. They work symbiotically, but they're individual entities that are interdependent amongst one another, which allows them to basically give each other a break when they need it. So when you're dealing with inflation, if inflation devalues a currency over time, then, or the value of the dollar, then whatever debt you take on also is being devalued. So if 2% a year is what your dollar is devaluing at, that means your debt is devaluing at 2% a year minus the interest rate that you're taking on.
So you might want to think twice before paying off a mortgage entirely with cash or paying off a car entirely with cash, because really you can use that debt to your advantage considering inflation and how it's going to devalue the amount of debt you have. That's why, you see people kind of take their sweet time paying off a mortgage at a really low interest rate. It makes more sense because in 30 years, once you've paid off the mortgage, you really just, you almost saved money in a way. Really, I mean, you paid more because of the interest rate that accrued over time, but you saved money because of inflation, devaluing your asset, or not your asset, your debt.
So basically run it up. If you're not doing anything, do something. And don't listen to idiots. You don't have to explain your investment thesis to everybody. People are going to tell you, don't wait for the dip, whatever. It's not going to happen. And if it does, are you going to buy when it dips 15%, the real estate market or bonds or stocks? Are you? Honestly, ask yourself. And in the unlikely event that this occurs, which the Fed has said, we're not going to let the real estate market crash. They're going to run up prices. I'm not saying FOMO, pay too much for real estate, but what I am saying is run it up, or at least go on vacation. Take on some debt because inflation is going to be running hot. So make your minimum payments, try to pay off as little as possible. Don't spread yourself too thin, but just run it up and take on this risk, because if you have a brain and you have this knowledge and you have assets that appreciate, especially like real estate that you can see, then you're good. But then we're going to segue right now into cryptocurrency, which is the next appreciating asset, the newest asset class since the 1600s. Let's go. Elihu, what is the newest occurrence in the crypto markets?
So Bitcoin just dipped. We've all heard it. Doge is rocking everyone's socks, but Doge also dipped. Bitcoin and Doge are head to head in who's the best reserve of a storage of value right now. Meanwhile, though, other cryptocurrencies, altcoins, mainly the ones with, networks of their own like Binance and Ethereum, are killing it right now. Ethereum has made new all-time highs. Binance is at a crazy valuation, and there's a lot of money being made right now in DeFi. which is where these tokens are mainly present in. What does this mean? Okay, this means that Bitcoin's dominance is finally below 50%. And when Bitcoin's dominance is below 50%, that means altcoins' dominance is above 50%. That means more money is going into altcoins, and all these projects are seeing amazing return of investments. One of these projects that I personally am in, and Peter's also in, is ApeSwap. And we've talked about ApeSwap on the channel several times on multiple videos, but now I just want to talk about how we're reaping the rewards of it finally booming. It's been doing nothing for a good amount of time, which was fine because you can farm it, you can stake it, and earn some passive income. That's the beauty of DeFi. But now it's actually making strides. It's gone from 80 cents to now $4.20.
It's $5.78.
Oh my
This is
god!
absolutely absurd.
Oh my gosh!
That's actually absurd.
It's amazing.
Today it's gone up 158%. Like that is
Wow,
incredible.
that is beautiful.
So why is this valuable?
Okay, so I mean, if you guys haven't heard of PancakeSwap, it is the top dog on the Binance Smart Chain.
That's Cake, right?
It is the most notorious. Yeah, that's Cake. It's the most notorious swap right now being used with over $6 billion market cap and a bunch of transactions, beating almost Ethereum's whole blockchain. ApeSwap is a direct competitor to this. They are their own decentralized exchange, much like PancakeSwap. The difference is they don't depend on PancakeSwap's liquidity. They have their own, and it is growing, baby. It is just growing and growing, and they are in line to become the Sushi Swap to Uniswap, the silver to the gold, the Pepsi to the Coca-Cola. They are just making moves, and this is just the beginning. I've been talking about this for a while, but I still think we're really early because ratio-wise, ApeSwap to get to the price of PancakeSwap would have to get to $260. And it's right now at just below $6. So if you're listening to this and you don't know what to do with your money in crypto and you want to follow our advice and lose all your money, put it all in PancakeSwap. I'm sorry, in ApeSwap. Ape in, because our community, us apes, we stick together and we're strong, and our liquidity is only going up. That's about all I gotta say.
And that's the show, everyone. If you want to see a video related to how to trade ApeSwap, Banana Coin, or crypto, altcoins specifically like PancakeSwap or any of the top ranking Bitcoins, as you see the leaderboard over here, Bitcoin and Ethereum are still dominating, but Binance Coin, which is an altcoin, is number 3. And then we got the others like Dogecoin. So comment below what you're interested in. If you don't know what you're doing, we'll probably put a video together if you want to see it. So anyway, have a great one, and go out and do something, you freaking lazy bastard.
Ciao.